The Hedgeless Horseman here. It's April 22nd, 2024. Quite an interesting day in the markets. Stocks are up, commodities are down, well, except natural gas and soybeans. Gold and silver down, for a one day move. This is quite substantial, obviously. Sometime since we saw moves like this, bonds, crypto, doing whatever. So far today, I haven't done a single trade. We're not even in we're in the same universe. I was gonna say, as where I'm thinking of taking profits in the junior space. I'm waiting for them to get overvalued. They have revalued from the recent lows, and it's been a heck of a move for some. We're talking like 50 to 150% off the bottom in 3 weeks, a month, or whatever. Those moves are absolutely unsustainable in the long run. You cannot compound like that, and I'll get to that later. But like Rick Rule, I'm after the big moves. Rick Rule says, he's in the gold space because he believes there's a chance, gold is going to go to $6,000. He's not in it for the next, he doesn't care if he's not in it right now, for example, for gold to go to $2,500. He's after big moves, long-term moves. He said, when he's been buying gold and silver juniors recently, he's in it for, next 2 to 3 years. And that's often, what it might take. If it's a real bull, we could have an uptrending market for the next several years. And even, bull legs within a bull can go on for months, like 2016, what was 8 months. But within every bull, certainly every bull market, but every bull leg, even if it's like 8 months long, quote only, there's several corrections along the way and consolidation and all of that. So this is perfectly natural to see now. Nothing goes straight up. Whereas, even in a raging kind of bull leg or bull market, you can have, months where, metals and juniors go down or go sideways. All I know is that, again, it's like I haven't even made a trade today. I still think we're maybe 200-300% from, getting to a sell territory for a lot of the juniors. So this is a rounding error. It's just 1 day of noise, basically. Thanks to the sponsors. So let's look at some news today. G Mining Ventures and Reunion Gold announced combination to set the stage for a leading intermediate gold producer in the Americas. I don't own any one of these, I don't think. And G Mining has a project in Brazil, really close to Cabral Gold. And they basically are, merging with, I think, the largest undeveloped gold deposit in that area. I think Reunion Gold has, 4 or 5 million ounces or something. This is what smart money do. They merge, they create, they build during a bear market. Because this is not the only news out today. Abra Silver announces 20 million strategic investments by Kinross Gold and Central Puerto and formation of a regional partnership in Argentina. It's quite interesting. It's like Kinross plus silver plus Argentina was not on my bingo card. Their last big purchase obviously was Great Bear. That's a gold play in Canada. And now they're getting into silver in Argentina. This is an investment. They haven't purchased the company, but still, I think it kind of goes to show. The tide has turned. We're seeing a lot of M&A. We're seeing a lot of placements by bigger companies, and they do that because they think it's cheap. They think the stuff they invest in cheap. You've seen McHugh and Lassonde's. Lassonde-backed entities, they're buying, they're participating in the placement. So now I'm not going to say late to the party, but it's like, yeah, some of the larger, maybe more, I would think that Kinross might have become a bit gun shy after paying $1.8 billion or whatever it was for Great Bear. But to get into silver in Argentina, that's kind of ballsy. Maybe that's gonna. I think, like what is typical. That I mean, we might see markets, or we think they're super rational. That's why we take every single daily swing to the bank, because you've heard us saying, market is always right and all that. But like from what I've been hearing, how large companies work. I mean, they get gun shy. There's people behind. There's people involved in every decision. And obviously it took a while to forget the lessons of 2011. I mean, Kinross back then paid $9.2 billion to buy Redback Mining, which had 2 operating gold mines in Africa. And at the bottom, I think they had to write like, I don't know, $8 billion of value off from that or something, which is absolutely insane. I mean, it's almost on par with their current market cap. That doesn't go away in a hurry. But the more stuff we see like this, I think, that's going to probably make some other companies and board members and shareholders of other companies more like, okay, yeah, I'm seeing our neighbors, they're buying up stuff, they're making investments, and we've seen, gold and silver perform well, and then you might start to, whatever, call the management team like, hey, we're going to be left behind. We better start doing something. We better start buying stuff, because they're buying up or merging, all the good de-risk deposits, and Kinross getting a foothold in one of the largest, silver deposits, etc. So I think this is going to probably just start to snowball more and more. But more importantly, like I said earlier, so far today I haven't done a single trade, because I haven't seen anything sell off enough that it's like, okay, changes the risk reward. I mean, if these juniors go up, down 5-7%, whatever, I mean, that's again absolutely meaningless, basically. But if I see someone, for some reason somebody panics and puts in a market sell in a junior with a completely intact story, just because silver or gold is down today, and they bring it down like 20%, then I might reshuffle a bit, but probably like 0.01% of my portfolio. My point with this chart was to show that these are the silver futures coming out of the 2016 bottom. And you can see, I mean, even though when you zoom out or you look at a weekly chart or something, it might look like that was almost a straight move up, like an exponential move. But it's like, look at this. Okay, like long consolidation, popped, then it consolidated. I don't know what the time frame is here, but I think it's a few months or something. Consolidated basically, popped, correction, then up from the bottom. But if you would zoom in, I'm not sure you can zoom in here. Okay, whatever. My point is that here's an 8.81% correction, here's an 8.56, here's a 12.26, etc., etc. And this is one, I mean, again, at face value, most of the time silver spent consolidating, and the pops were like, I mean, from here to here in time, from here when it broke out of the consolidation to here, then correction, and then that. So it's like, I don't know, 10 to 20% of the time it actually, made higher highs. But like 80% of the time, silver was actually, in the medium term, whatever, it's like consolidating. Or, in a correction. I mean, okay, this time from here, that's a correction. From here to here, correction, without going nowhere but sideways for a long time. Okay, a rally, an even longer correction, a rally just to get back to these highs, and then pop. So it's like, I don't know, 1, 2, 3 pops within 8 months, and every pop was like, maybe, this is a day chart, I mean, I don't know, a couple of weeks, So think about that. It's like most of the time, even in a bull leg, the price is not just going to go zoom. It might happen at the end. It might be a nice pop in the bottom. It might recover quite quickly. But still, it's like people's expectations, because people mostly don't know why they own something, and they own a lot of crap companies that they're terrified of holding actually as soon as the markets turns against them, meaning they get cheaper, price goes down, they get scared. And of course, like always, 95% how they operate in the markets is that they're trying to only be part of this. They never want to see this. They never want to. If they think this is coming, they're gonna sell. And they're gonna sell even more the lower it goes. And that's why this junior sector is so cheap right now, because the trend down has been so long. So yeah, juniors. Going back 2016, I only hodled through 2016. I didn't pay much attention to it back then. I don't really have a lot of memories from back then, but I think this is just maybe helpful to point out. Juniors did better than silver once it started, kinda. Like today, don't see people ready to sell. Today, given that silver's down almost 6%, one might expect the silver juniors are going to be down 20%. I haven't looked at all silver juniors, but I doubt a lot of them are down, 10%. Or gold for that matter. I think we've simply been running out of sellers, weekends willing to sell this low. Just think about it. Let's say you owned all the stock in a company. You could put the next trading price at whatever. So if everyone that holds a stock, regardless if silver is down 30%, if they don't feel like selling, the price is not going to go lower, because they're not going to put in a sell order lower than they want to. So if you simply run out of sellers, imagine most juniors, that's like 90% of the stock held right now, or 95 or 98. Let's say everybody's in it for a 2 to 3 year stretch. You're not going to see a lot of selling in that case, because in that case it's like 2% of people who are, let's say, short-term oriented weekends. Those are the ones that will sell on days like this. But if only Rick Rule holds 98% of the paper, and he's in it for a 2 to 3 year hold period, you're not going to see his shares hit the market. You're not going to see any selling pressure from him. So this is Bear Creek Mining, which was a very levered kinda. They were not in operation, unlike now, but a large marginal silver deposit. So this was how it looked all the way up from whatever it was trading at, 0.40 cents to like almost $4. So around a 600% move from bottom to top in like 8 months or something. I was gonna say, somewhat similar. It's like, corrections, and these corrections are not typically like super small. It's like 22% down, gets a bit higher, 17% down, goes back up again, consolidates, an additional like bull leg, but it's like this is not a lot of action. The big action moves were like, okay, here you have like 4 days where it kind of gapped higher 4 days in a row, but it took until this candle to actually make a higher high. So we're talking like, well, I guess like 2 days higher high, and then it consolidated for a few months, I think. And now here you're starting to get higher highs again. 1 day, 2 days, 3 days, and that's a top. So think about it. Even though when we zoom out and look at the whole 8 month run, you see percentages like this in this space. Oh, 600%. Wow, over 8 months, that's, I mean, it's just ridiculous what a good return that is. But if we zoom in, I mean, how much actually was happening every day? Yeah, there's a big green candle here, but it's like, yeah, it's just slightly above where it traded, 2 weeks earlier. And here you have a bunch of like, nothing happening really. Okay, up, but it's like not even higher than here. Up a bit, yada yada. And again, then you have like 1, 2, 3, bam. Okay, you have a ramp for 3 days, an immediate 20% correction. Takes 2 days to get back here, and then there's like a 2-3 day ramp, and here again when it's making higher highs, like 1, 2, 3 days. So in terms of actual value change, or price change I should say, a lot of the action happens in only a few days, and a lot of the time the stocks are actually like consolidating, bounce up a bit or go up a bit, consolidating up a bit again. But it's like most days, even if when you hear like, oh, 600%, it's got to be rock and roll, it's got to be 600% in a week or a month. Like, no, not even. This was the most, I think, impressive bull leg in juniors ever, or the best quarterly rally, I think Q1, the first 3 months, something like that. But still, if we zoom out, most of the time, not much happened. Well, I'm not going to say that, but it's like, yes, this was, okay, closed down here, boom, boom, but still, I mean, it's not even higher than here. And then just, a few days of rally, of a few days of price action that actually took it higher than the previous top. So, I mean, if you I was going to say bought here, then it's like, okay, here it's starting to get interesting. But then you immediately get a 27% retracement back here, and only back to the recent high, slightly above, another correction, etc., etc. Obviously, if you would have just bought any dip here, the returns are wildly different. I mean, compare if you bought here, held to here, versus like down here, up to here. It's like shorter time frame until returns happen, and much better returns than from this top. So it's like dip buying. It works in a bull, it works on a now in a macro bear, or I don't think we are in a bear anymore, but you know what I mean. It's like, oh, we've spent a year like being dragged across the bottom. If you bought during this period, for example, in 2016, which I did, I mean, the returns are just phenomenal. And if you just keep on buying cheap, I mean, my point, I guess, is that buying cheap is a good idea in any market. It just happens to be that almost every day in at the depths of a long bear market, everything is cheap, and you can buy. I mean, does it matter really if you bought even this high or this high instead of here? No, it's like, I mean, when it got going, you would be in huge profits on all buys down here, even if they were short-term tops. Because this was so cheap to begin with, maybe it's starting to get overvalued here already. So maybe these buys aren't good long-term buys, or these buys aren't good long-term buys. Maybe these are somewhat, but it's like we know today, for example, I mean, it's down to 40 cents. Because this is a highly marginal, so it crashed below these lows even. But this is of course a trading sardine. And just to I was going to say, just to give some perspective, if you would average 100% per year in your portfolio, that's like impossibly good, pretty much impossibly good. If you would just calculate, okay, what's that in a average per month return? That's 5.95% per month. If you could average that per month, 30 days, 4 weeks, 5.95%, you would get 100% compounding average per year, which is like impossibly good. And yet I see people complain about let's say we get a minus 20 or 30% move, whatever, off the bottom, after they've run like 50 to 150%. And people are already complaining. I mean, if you think about it this way, if you're even up 20% in a month, let's say including this correction, juniors are up 20% of the 20% month over month. That's an absolutely unreal compounding pace if that were to hold up. 20% per year, I don't know how much money that would be in just 12 months. Insane. So it's like, my point is like most people's expectations are unfathomably off. I mean, do some calculations. You'll see. Put up a compounding calculator and put in. It's like, okay, the juniors are up, let's say 70% in 3 weeks. They go down 20% from that top, and you're starting to bitch, and then you just see whatever the return is. After 70% up and then 20% down, whatever that percentage is. Let's say that took place over a month, and then okay, how much is that gonna amount to if I could compound, if I could have 70% up movements, 20% down movements every month, and see what happens after 12 months. I don't know. You might have $1 trillion. I mean, it's absolutely crazy. And what I'm trying to say and get people to do is like, be patient. Be patient. Because even massive moves takes months and years, and they will have many corrections along the way. And it doesn't matter. I know everybody believes, literally, or that's how they act, that why people don't make money in this space or investing overall is that because they're, oh, I was in the sector when it went down. I was in during a correction. That's why I'm, losing money. It's like, that's not at all true. You could have just sit pat in every single correction here, and you'd have made a shit ton of money. And hopefully you would have sold trading sardines when they actually were very popular. Sentiment was red hot and all that. But it's like, the reason why people don't make any money is not because they sit through corrections. This is silver actually. This is Bear Creek money. It's not because I didn't sell here and it went like that. No, that's not at all correct thing. The problem is that everybody tries to time everything. If they're waiting for breakouts, it's like, I mean, let's say, where would you have bought breakouts? I mean, this is hard to say, I guess. I mean, consolidating, okay, uptick here. Maybe you'd have bought there, maybe. But it's like, maybe you sold here, now you're starting to doubt the move or whatever. It's like, you're basically playing for pennies, I'm going to say. Whereas the big opportunity is to just catch a big multi-month, multi-year rally, and you don't have to trade. I bet there were a lot of people that didn't make that much money in this move because they tried to trade every move. Okay, it started to gap up. Maybe they bought here and then it's like keeled over. Where did they sell? Maybe down here because now they thought, oh, that was a top. And maybe they bought back here and got a 2-day profit before it topped out again. You know what I mean? But it's like, instead of just, I'm just going to keep it really, really friggin' simple. I'm just going to buy whatever I think is cheap. If something is cheaper here than it was up here, I'm going to add. If it was cheaper here than here or here, I'm going to add more down here. And in the end, everything is going to work out just fine. And you'll make more money than 98% of people who tries to trade everything, try to get every single move right. I mean, where do I think we are now? I don't know. We might be like here or something. I'm in it to go from here to up here somewhere. And I'm not going to even pretend to think I can time everything. I'm not going to know when when this correction is over. I'm not going to know when the next top is in. I didn't know that this was the top back then. I didn't know that this was the bottom. I just kept buying whatever I thought was cheap. Yeah, this is basically what I was saying. And again, I've touched on this before. When your juniors are up 10% on a day, you don't celebrate that. You celebrate because you think it will continue to do that. People put out charts of like, oh, this is running, and I do that myself. It's not like you're not putting out those charts and like getting all bullish because, hey, I'm about to sell here. This is a sell signal or whatever. No, you're like, to yourself, and I mean, either conscious or unconsciously, you're trying to get other people, bullish. That's like, hey, this is just a start. I mean, look at it's done 10% today. Imagine if it's gonna do that for the next, 2 months. So it's really not, even on a good daily rally, it's not that we're not actually celebrating if our portfolio is up 5 to 10% on a given day. We're getting excited by, oh, if this keeps going like this, sooner or later I'm gonna be up a lot. That's what we're projecting. We're projecting today, and that's what, when juniors are down 10%, that's not what you get depressed by. Obviously, you thought everybody wants their portfolio to go up every day, so that's one thing. But you get depressed because you think it will continue to do that. And that's why after you've seen a long downtrend, a lot of down days, that's when people want to really, really sell. Because now they have a lot of evidence to suggest that, hey, if it's gone down for 3-4 years, it's obviously going to continue down. Because I haven't seen no evidence that the trend is up, or there's even, we're even remotely close to a bull market for 3 to 4 years. Then people will, like Rick Rule says, people will forget that these juniors can go up as well. And we do that, we get affected by that, despite the fact that if anybody has looked at any sort of, junior charts, we should know that 100% moves takes months and years. Months and years. And we saw that again in one of the most epic rallies in juniors. It took 8 months. And we're talking from bottom to top. So maybe from here it's like, 300-400%, or maybe less than that, like 200-300%. But it still took 6 months. And there's a bunch of corrections along the way. If we're in for big money, we have to be in for big moves. And big moves take months and years of doing nothing but holding. Literally just holding through all the volatility. Because it's impossible, pretty much, for a big move to happen within a day or a week. And if you had a holding period of like a week, you might, if you bought here and you only could hold out for a week, you would have sold here. It's like, again, on a short-term basis, even in a bull, it's very uncertain if you're going to make money or lose money on paper. But from a longer-term perspective, if you buy this sector when it's extremely cheap, the next move by definition is going to be up, and it's going to probably play out over months or years. So it's like, okay, I'm going to buy here, and then do like Rick Rule. I'm going to hold my portfolio for 2 to 3 years maybe, or however long it takes for this sector to get overvalued. Do you think that could happen? Absolutely. It has happened every single time before in history. That's a no-brainer. A no-brainer is not guessing the next short-term move, even in a bull. I couldn't tell you if we are indeed in a bull right now. I have no idea if next weekly move is going to be up or down. I don't play that game. Everyone else plays that game, and that's why everybody else loses. Yeah, that was that. Just an interesting observation. Like nickel is doing quite. I thought this was this is not the nickel. Unlike the metals, we have nickel. Nickel is, doing pretty well. It's kind of close to $2,000 or whatever it is. And this is the Sprott Nickel Miners ETF. Again, I'm not trading based on this. I own stuff like, Magna Mining because I think it's dirt cheap. I don't need that chart telling me it's dirt cheap. And as always, what I hope to be the case is like, okay, how do you make, again, big money? Well, Magna cannot double in value or price probably, in a day. Okay. Let's say, their plans work out over the next 12 to 24 months. Well, maybe Magna would be worth a lot more then. If you give them 3 years, maybe even more, it's worth even more. If you give them 4 years, maybe even more. Again, relative to where you start off. Because let's face it, I mean, let's say you bought Magna or, Stillwater Critical Minerals, or like, I own a bit of nickel, and I own a bit of Fathom Nickel as well. I should change. Let's say your time frame is 1 day. How much money do you think you would, let's say you buy today, okay? How much money do you expect to get from that trade if you have a 1 day holding period? If you're like, okay, I'm going to buy today, I'm going to sell tomorrow at the open or close, whatever happens. Flip a coin if it's up or down. I have absolutely no idea. Within whatever, a few days more, still no real idea, not even for Magna. But okay, if we go from this time period, what could have happened in whatever, September 2024? And that's not that far off. I mean, it's only like 5 months. But then the spectrum of what could happen. Let's pretend this is like the spectrum of possibilities. Then, I mean, with more time, more stuff can have happened, obviously. If you have a good management team who's working every single day trying to create value, if you give them 1 year, on average, they might have created X amount of value. If you give them 2 years, maybe double that. And 3 years, maybe triple what they were able to create in 1 year. That's the alpha of a management team. That comes from holding period. So it's like, hey, if we're way up, out in 25, and that's not too long. I mean, that's like, 8 months, which is not a long time in the investing space. All of a sudden, a lot of stuff could have happened. The price, the value would probably change a lot, and the price, I would think, could have changed a lot as well. But again, in a short time horizon, I have absolutely no idea. I don't own a single no-brainer on a 1 week horizon. Flip a coin. 1 month, flip a coin as well. I have no idea if any of my juniors are going to be up or down in a month. If I give myself 2 years, if I hold my positions today at the current prices, do I think the surprises are going to be to the upside or downside in terms of valuation? Well, let's say some of these juniors, if you give those management teams 2 years to create value, maybe they will have doubled or tripled the value. And then you just think, well, okay, then sentiment has to get a lot worse for them to even be priced at the same, price they're today. If they have, let's say, 3 times more value, to be as cheap as they are today, then, the share price or the sentiment has to become 3 times worse for it to have the same valuation. That goes for that goes for I mean, big moves as well. It's like I have, even if you bought here, do you necessarily know what the next day is gonna be like? If you bought here, do you know, is there a big opportunity tomorrow that's like, oh, it's down here, so that by definition means it's gonna go up or down? No, it's like I have absolutely no idea. What I do know is anytime this sector gets extremely cheap, the next big move, and that's a matter of time, it's a when question, not an if question, they're gonna go up a lot. That's a no-brainer. What's my holding period? I have no idea. I thought this sector has been very cheap for like 1-2 years, depending on the case. I don't know when, and this is I'm just using Defiance as a proxy here. I don't know when you're gonna go from, let's say, very cheap levels to not cheap levels. I just know that they are. So if I hold here, if I buy here or buy here, my holding period would still be whatever it takes until the sector revalues. I'll get off when it's overvalued, not before. So by definition, I cannot know what my holding period is, not even in, let's say, trading sardines. And like I discussed before, we could be here or we could be here. I don't know. But my condition to sell is when we're up somewhere around here, let's say. Again, it's a case-by-case basis, and I of course, like always, will value shuffle, use the short-term volatility. Let's say Defiance for some reason went down here, and the other juniors I owned stayed here. If I think that's totally unwarranted, I like Defiance, yada yada, then I can sell some of that, buy the one that's down even more. So that's the only reason it's like short-term volatility should be used, not get abused by it. I don't try to predict moves like this. I see what the market gives me. Let's say I loved Bear Creek Mining. And Bear Creek Mining went from here to here. And the other juniors I liked or loved, they went from here to just here. So they didn't get as cheap as Bear Creek Mining. Then I might sell some of those, buy some Bear Creek Mining. In the end, that's going to benefit my portfolio, assuming on average I am right. Because if I sell something that I think has 100% upside left and buy something that I think has 150% upside left, yes, I'm losing 100% returns, but I'm gaining 150% returns on that money. So it's like volatility, and like I have been trying a lot to just explain, it's like the only reason why you can make a lot of money in this sector is because it does crash on occasion. This is where you create easy money. This is where you create easy money. This is where you create, according to the billionaires, the easiest future money we might have seen in decades. If there wasn't this kind of volatility, I don't know if I would be in this sector, because then it would be hard. I mean, imagine a sector that's like totally rational and goes like this. Where's the opportunity? Compared to a sector that goes like this, where the future returns go from like negative whatever to like obscenely profitable and high likelihood of success. So what I am trying to say is, like, if you're playing, if you want to, I don't know, stress yourself out, be after the small moves, make a bit of money, perhaps, probably not, but it's like maybe make a bit of money here and there, well, be a short-term trader and have good luck with that. Because, I mean, look today, for example. I mean, some people have been calling for a correction for weeks already. Some people believe it would continue to go up. I have no idea. The experts don't seem to have a good idea. And of course, that's for, let's say, the gold space. Then it comes down to stock picking. And then we're talking individual names. Some might be up today when silver and gold is down. Some might be down today. Some might be down when gold and silver is up. So you can't even, the gold price doesn't even help you out in that case. It's a pure case by case basis. And if you think junior you own is undervalued by 200%, which we kind of seen happen with, Lasson's Orla and McEwen, Rob McEwen's McEwen Mining. I mean, they've been paying 100% premiums on some of these juniors. So they might think they're undervalued by 200%. Are we there yet? No. So if I'm after 200%, it means I'm going to hold whatever stock until it's up 200%. And what path it goes there. I mean, if I, like, okay, in my books, like, I'm dead sure Defiant Silver is worth this much, let's say. Do you need to know exactly what way it takes? No. Your condition is, well, okay, unless I find something cheap or whatever, or I just go away on a holiday and have just a selling condition that's like, okay, if when Defiant Silver reaches this level, sell. Then you go away for 2 years on vacation, whatever. That's pretty simple. No activity. Not trying to predict a single daily, weekly, monthly move. You just think, hey, okay, in my ballpark or my base case is that Defiance is worth somewhere around here. And I'm going to sell when Defiance trades at a valuation that's somewhere around here. If you're wrong, who knows what will happen? I mean, theoretically, as always, like the downside is 100%. But if you're right, you already know what you're going to make. So let's say that is 200-300%. And you're pretty sure something's going to reach that. Do you need to know exactly when that happens or how it, what way it takes there? No, you don't. It doesn't matter if Bear Creek if you thought Bear Creek Mining was worth this much, for example, and that's the whole reason why you bought down here. It didn't matter if there were a lot of corrections along the way. In case you are right, it was going to hit this level one day and you could sell. And given that the trade, the returns are asymmetrical because anything can go down only 100% and up a lot more than that. So for every, let's say, Bear Creek Mining, you were right getting 400%. That would have paid for 8 other similar sized positions that went down 50%. You don't even need a good hit rate. That's my point. But there's no way to get a multi-bagger if you can't hold it for months or years. I mean, that kind of goes without saying. Great Bear took, I think, 3 years or something to become a 20-bagger. Let's say you have a high-risk, high-reward portfolio where, okay, any one success should pay for the many that won't be successes. So if you hold Great Bear, which later became a success, but it took 3 years for it to do that. If you held Great Bear for a week, how many failures did Great Bear pay for? Maybe none. Maybe it went down. But you held it for a week. So if you legitimately are after multi-baggers and big returns, there is no other option than to have holding periods that are months or years, because that's how long it takes for big moves to play out. So knowing that, does it make a lot of sense, or should one change your approach? Should one sell one's entire portfolio because gold and silver is down today? What's the strategy behind that? Should I sell on down days and buy on up days? Even though the metals typically zig and zag. So I'm going to end up buying mostly on short, in short uptrends, ready for a new downtrend, and sell in a short downtrend, ready for a new uptrend. Basically trade myself to oblivion. That doesn't sound like a smart idea. That's why I don't care. I'm again, my simple strategy, kinda. I mean, I mostly do stock picking, but anyway, uh, the base case, if we use Defiance as some sort of a junior proxy, uh, my simple case is that juniors will trade up here one day. And given where they are starting off, which is down here, I should be willing to wait years for that to happen, because the returns are going to be well worth the wait. That's it. Are we there yet? No, we're not there yet. Do I need to check my portfolio every day? Well, the odds of any day having your juniors up to what you think is fair value, doing basically a 1 day move, so you actually need to sell. I mean, the odds of that is like non-existent. That's not going to happen. Not even the most violent rallies just went straight up in a day to whatever fair value was and then overshot it. No. The reason I'm 100% invested is because I'm waiting for this move to play out, and I don't know if it's gonna go like this or that, like that, or from here or from there, or zig and sag here, maybe a top there, bottom here, or maybe now it starts to run again and then a retrace. I have absolutely no idea how the path here is gonna look like or when it's gonna come. But this is the no-brainer I see. That like every other time in history, the junior miners are gonna be overvalued one day. And if we look at, let's say, some delta in that future versus today, let's say 300%. And we know that if you would compound at 50% per year, that's absolutely remarkable returns. 20% per year is absolutely great as well. So knowing this, it's like, okay, if we just back calculate, okay, if I think I'm going to get 300% when that happens at least, it means that I should be able to do nothing for 3 years and still be happy. If I anytime I start a short-term trade, I'm not acting on the no-brainer. I'm not investing for the no-brainer. If I'm short-term trading, you miss the whole point, in my opinion. There is no no-brainer here in the short term. Not even at the, let's say this here is the second cheapest level a junior is going to trade at for the next 4 years. And let's say I sell because I think that it's going to go down tomorrow. Is there a guarantee that it's going to go down? No. Where's the big opportunity? This is the big opportunity. That probably, again, proxy-wise, that probably all of the buys over the last 1.5 years, if a junior is still around, you're going to be in profit one day. That's a no-brainer. Short term, there's not even no-brainers at the top. I mean, let's say if we just zoom in here, it was probably overvalued, maybe even a lot here. But the next day it actually went higher anyway. Or maybe it was overvalued here, but it still went quite a bit higher before it killed over. This is short term, there are no no-brainers, not even at extremes. At extremes, they typically, I mean, if we're talking like I was gonna say like an exponential whatever rise, I mean, stuff accelerates at the end. This is just getting cheap, getting more extreme cheap. So even there might be a bias to the downside, but it doesn't matter because the big plays to the upside. So even if you thought it's like 80% chance that when we're down here that it's gonna go down even more. That's actually greedy if you act on that, in my opinion. Because if your base case is that any buys down there would net you 500% on average in a basket of juniors, that's an absolutely mind-numbingly good trade. The question is, okay, if it gets cheaper, it's just simply going to be more, up to 750 perhaps. Every single buy would probably be in profit if you actually play the longer term game. But if you sold because you wanted to time it perfectly and you thought the short term was 80% chance of it going down, what you actually are saying from a long-term perspective is that 500% over, let's say, 3 years is not good enough for me, which is bullshit, because nobody can average those kind of returns. What I'm saying is that this sector is absolutely batshit crazy, and the only reason why it is because of this. No one in the space is in it for 5% returns a month, 90% are in it for parabolic craziness. That is exactly right. That is why everybody is going to buy. That is why everybody buys every top, and that's why most people start out in this sector buying a top. Because this is what people are after. They want to get rich tomorrow. When anything is down, that's the opposite of a parabolic move higher. And it can absolutely get killed like this. It's like, sentiment has just been atrocious. But anyway, I hope, you get something out of this. This is just a long way of saying that, a lot changes on a day-to-day basis, but at the same time, nothing changes at all. If we're to believe Rick Rule, he's buying right now, and he's gonna do nothing in those stocks for maybe up to 3 years, and that simply depends on how quickly they get overvalued. If we go like this, he might sell here and have a holding period of a month. If we go like that, he might need to hold them for 3 years. And regardless of the time frame, it's going to be worth it. It certainly was worth it here, and it certainly will be worth to get 300% if it takes 2 to 3 years. So, and that's why he basically says that, it's not hard to beat this sector because people do so many crazy things like selling this cheap and all that. Yeah, anyway, consider me biased. For example, Defiance I own. So not investing advice. If I talked about any other companies, consider me biased. Assume I own them. Assume some might be sponsors. Assume I might buy or sell at any point in time. So again, like always, you're gonna do yourself a disservice if you just strictly try to follow anyone. If you don't understand or see a case or have a playbook or know why you bought, don't buy. It doesn't. If the only thing that makes sense from an investing standpoint, if you know why you bought, and you know why you would sell, and what the reasons for selling is. I'm very bad at selling. I'm very good at buying low. That's my main strength. But anyway, thanks for listening. Bye.